Hi, Mike. Great to have you on the show today. How are you doing?
Good, Ed. Excited to be back. Excited to talk markets. Excited to talk blockchain.
Yep, there's non-stop events happening in the market, so it's great to catch up again. Um, you are obviously CIO and co-founder of Tidal Financial Group and portfolio manager of BLOK, BLOK, an actively managed blockchain ETF, which we'll dig into today. Whereabouts are you calling from? Can you just remind me?
Yeah, so I'm calling in from New York. Our firm, Tidal Financial, we oversee about $6.2 billion and help platform about 80 ETFs. Um, our operations are in Milwaukee, Chicago, Detroit, but the investment team is mostly here in New York. So myself, Dan Weiskopf, who's the co-PM, and Ryan Fitzgerald, who's the analyst on Block, all are headquartered in New York.
Okay, that's
Yeah.
awesome. I mean, I didn't realize
Yeah.
it's a massive variety of different ETFs.
Oh yeah.
Um, yeah, I
We're
don't.
one of the fastest growing platforms for entrepreneurs who want to launch and grow ETFs.
Oh wow! Oh,
Yeah.
congratulations.
Yeah.
um, yeah, so obviously, like you mentioned, it's quite topical at the moment. We're living in some quite crazy times. Obviously, the banking crisis is the latest thing to sort of evolve. It's still unfolding. It's caused quite a bit of a fair bit of volatility over the last month or so. Potentially more to come. It's kind of eerily similar to 2008. They've obviously just banned short selling on the banking stocks. We all know what happened after that, but it'd be great to get your sort of overview on what you think is going on, how it impacts blockchain, and do you see Bitcoin and other cryptos as a viable alternative to traditional banking to avoid this sort of chaos?
Yeah. Yeah, I tend to agree with Michael Saylor's take that anything that is delegitimizing of the traditional banking system is like a huge win for blockchain and Bitcoin, specifically Bitcoin in that structure. Um, the banking system for us as portfolio managers of Block has been a very interesting place for us to invest. So, we've owned a lot of this stuff. So at some point in the history of Block, we owned Silicon Valley Bank. We sold it, I think, about 18 months ago. And it was because their narrative changed. It wasn't because we predicted a banking crisis. It was because they said, hey, we're more focused on founders, in fintech than in blockchain. And so it was like, okay, they're not really doing anything here. Um, but this year, specifically, I would say Dan Weiskopf's leadership on this. One of the things we love to do is meet with management. Now, management very rarely tells you very much that's going to help you on the company that you're talking to. But what they do tell you often is who else they're working with. You learn a lot about the supply chain. So, like talking with companies like Galaxy or Coinbase, you start to learn, hey, maybe they're not doing so much banking anymore with Silvergate, and it helps you get out of a position, right? Because if they're expressing concerns, that's a good indication for us that maybe things aren't perfect there. So, you know, we also speak to a lot of private companies like Figure with Mike Cagney, and we knew certain banks that he was working with to originate mortgages on the blockchain. And then we started to hear this one's not doing so much anymore. So we actually exited Signature Bank in January, um, because
Okay.
we heard that their commitment to mortgages on the blockchain had dissipated, not because we knew there was going to be a banking crisis. Um, we held on to both Customers Bank and New York Community Bank because we heard from clients that they were moving from Silvergate and Signature to those banks, right? So we weren't as worried about the deposit runs there. And Customers, for example, at the height of the crisis, we actually added to the position on a day when the stock was down 40%. And I will
Yeah.
tell you that's one of those things where you don't feel good, right? Like you have your conviction, but that's a big bet to take. And then New York Community we held on to, and recently we exited because they got a lot of, they were able to acquire assets in this. The stock price was up, and we said, hey, we've made money on this. Why are we going to stay in a regional bank during an ongoing regional banking crisis? We made money. Let's get out of the way. So we've navigated this pretty well. That's the traditional finance world. The reality, though, is as the banking systems become evident that without government backing, without more intervention, there's a lot of shakiness. That bodes really, really well for the concepts of decentralized finance and everything that is behind blockchain and Bitcoin.
Yeah. And so, in what ways do you think blockchain can enhance the finance sector, banking sector?
Yeah, so it's so funny because everybody always wants it to be right now. Like they look for Twitter
Yeah.
pictures of I bought a cup of coffee and I did this and I did that. Um, yeah, compared to what you can do on Visa or MasterCard or JP Morgan, it's a joke today, right? It's slow, it's clunky, you know, it's difficult, right? Like, I have my own private ledger, right? Like it scares me to have it sometimes. I was just in Europe, like I'm walking around with, you know, double digits of Bitcoin in my pocket. Like, what if I get
Yeah.
pickpocketed in Paris? Like, so it's not easy to be your own bank. Now, that's easy for us to say because we live in first world countries and we deal with places that have Visa and MasterCard. Now go to places that don't. Go to El Salvador, go to Vietnam, go to Venezuela, like go to places with hyperinflation like Argentina and tell me that this doesn't make sense. So, yes, the technology as it exists today compared to traditional finance, slow, clunky, not a great replacement. But tell you what, U.S. government issues a CBDC, their own digital currency, and decides when your money is valuable and when it's not, and uses it as a weapon against you. You're going to want something outside the system, and
Yeah.
everybody kind of smirks at those things. There's a lot of things that have happened in the last 5 years that was not on anybody's bingo card, and so it changes it by being outside the system. And that's going to take some time. Now,
Yeah.
great things are happening. Like Lightning Network is making things so much faster. Things like everybody wants the proof case of blockchain and Bitcoin to exist today. And most of it for our world, for the developed world, is really 15, 20 years away or one more crisis away.
Yeah. And so the narrative that's sort of been lifting the cryptocurrencies over the last few months around the banking sector and sort of not having this connection to the Fed, the print's money, and you have more control over um, the currency or money, essentially money you have. Um, what other factors do you think may have contributed to the rise in cryptocurrencies over the last 6 months? They've been doing they've been doing well off the bottom,
Yeah. So I have this joke with my wife that when I hear this question, I always just say it's more buyers than sellers. Um, but there's some truth to that, right? So cryptocurrencies, blockchain, Bitcoin, all those terms, they climbed a wall of worry last year, right? Three Arrows,
Yeah,
GBTC, FTX, Voyager, like you just name it, it happened. And guess what? Not a single one of those were really about Bitcoin. And not a single one of those were about decentralized finance. And not a single one of those were about blockchain. All of those was the second oldest profession in the world, which is financial fraud, right? They were all Ponzi schemes and financial frauds and over leverage and all the traditional shit. None of it was like everything that happened at FTX had nothing to do with Bitcoin other than our government wouldn't regulate it. So it went offshore and got to do whatever it wanted to, right? So there is some truth to more buyers than sellers because there's a ton of truth to last year. There was way more sellers than buyers because there was deleveraging. So this year, yes, Bitcoin is a hedge to a banking crisis. Yes, Bitcoin is a hedge to hyperinflation and easing monetary policy. But it's also that the regular old, hey, this is a technology, a store of value, there's halving, there's a very easy way to model out the value of it. We're just back to that because we don't have all the negative news stories, right?
yeah,
Right now it's just, I mean, yeah, FTX was a scam, but apparently almost most of our regional banks are as well. They're all just Ponzi schemes in that as long as everybody believes in the full faith and credit of them, they keep their money there. As soon as
Yeah.
there's a Twitter run on it, they all pull their money out, and it's the same as FTX, right? Now,
Yeah.
I don't want to insult anybody. I don't really mean it that they're intentional on it, right? I don't mean that these banks don't try to act as fiduciaries. I do mean that Sam at FTX was not a fiduciary. But
Yeah.
the overall structure is still in some ways like a pyramid. As long as enough people keep their money there, there's a viable business. If people pull their money out because they're fearful, it collapses. That's the same for FTX.
Yeah.
FTX deserved it. Silicon Valley and First Republic didn't deserve it, but they got it. So, you know, I don't know how you look at somebody who's 25 and tell them that Bitcoin's more risky than Silicon Valley Bank at this point. One's
Yeah.
still alive, right?
And obviously, there's been a lot of chatter recently with regards to Bitcoin on inscriptions and ordinals, which are actually, I mean, negatively impacted, I think, very recently because they were congesting up the chain. I don't know if that's been resolved yet, but I don't know if you could just give us some insights on that. I know you've been looking into it.
Yeah. So Weisskopf's done a lot more work on this than I have. We actually did a Spaces yesterday with Saylor. We had like 8,000 people come, and he actually
Wow.
talked about this. Yeah. Um, and Saylor, his take on it is really that this is something that's going to positively impact the miners, right? Because it's like free money to the miners, right? Miners historically make money by producing another Bitcoin. When they produce another Bitcoin, they can sell it into the market or they can hodl it. When they do produce that coin, it verifies everything that they've ever done. But now they're all of a sudden getting transaction fees because people are using these inscription ordinals to essentially do a lot of the things that more robust chains like Ethereum offer, like NFTs or things like that. This isn't the first time I've heard these ideas, right? So I think back to 2017, they used to talk about coloring coins, which was a similar concept. This is the slow build of Bitcoin, right? So Bitcoin is decentralized. So every change is painstakingly, horribly miserable to get to happen. So things like SegWit and then Taproot and now the way these ordinals are working, they are clogging things up. It is complicated. It's because everything is about building consensus across a decentralized network. Bitcoin is the ultimate cat herder, right? So it's really exciting, especially for the miners. It's really exciting because it also gives that proof that the Bitcoin of today is a base layer. The Bitcoin of tomorrow will be able to do many, many, many more things. We
Mm-hmm.
just don't know what they are. This is a good example. I've always been a believer, and Saylor gets this one too, and I've heard my old mentor Murray talk about it, that pretty much anything that becomes valuable on another chain, on Ethereum or Litecoin or Doge, whatever, Pepe, will eventually get co-opted into the Bitcoin chain because that value will want to be on the base layer. I like that concept. I don't know that it always works because Bitcoin will evolve so much slower than any of these others.
Yeah.
But
Yeah.
I do get it. Like, it's the giant Pac-Man eating up 23,000 other cryptos. um,
And um, do you think we've come out of crypto winter now? And or are there any major macro risks that lie ahead as well?
I think it's ironic. I think the greatest threat to Bitcoin right now is continued inaction by the US government. Now, I don't know if that's really fair to Bitcoin globally, but as
Yeah.
a Western investor, I guess I'll put it, the inaction has caused all the problems. It's right. It's the fact that they wouldn't stand up and say Bitcoin is X and treat it Y, and here's the
Yeah.
accounting standards and all that. And therefore, Tom Brady invested in a fraudulent company instead of the cryptocurrency itself because there's more regulation around that fraudulent company than the crypto than the commodity of Bitcoin, right?
Yeah. Yeah.
So I think the longer we wait for some clarity, the more likely we have more scams, which set us back. Whereas we should be building infrastructure and embracing, and the US should be ahead of everybody else, it's massively far behind, even though, 50 to 60% of mining is here in North America now,
Yeah.
right? That's a big flip. But then a lot of the rest of it is in Russia. We don't want it in Russia. That's just as bad as when it was in China, right? So lack of regulatory, to me, is the thing that can extend the winter. Um, you also have this weird, call it teeter-totter of, if inflation stays high, even though Bitcoin is a hedge to it, that means the Fed tries to fight it more. The more they raise rates, the more it
Yeah.
proves that they are actually fiscally responsible, the less you need a hedge. So it's kind of a ratchet. Um, you know, uh, I don't think that, you can't raise into perpetuity. So it's not like that can go on forever. But
Yeah.
yeah, lack of regulatory clarity is probably the thing that has created the most problems
Mhm.
for the entire industry.
Do you think they're at the end of their hiking cycle? They're going to pause now, or
Yeah.
it's just difficult?
Luckily for me, as a Tidal is an investment platform, we have some certain specialties and things like blockchain and being your own boss and Gaiad's lead lag stuff and risk on, risk off. I trying to predict what this Fed is going to do. I have no idea. Um,
Difficult.
yeah, I don't know what they're going to do, and it's not really going to change what I'm going to do,
Yeah.
right? so so it's like I look at it and say I don't have to answer that question. I don't think inflation's done, but
Yeah.
I think they're going to have a hard time fighting it. So I doubt that we're going to see cuts this year. But slowing is a pivot. They don't have to go to cuts to be a pivot. So
Yeah.
yeah.
Yeah. Fair. I thought we could just get a quick overview of your career and maybe
Sure.
just a little bit about your role as the portfolio manager of BLOK.
Sure. So I'll try and keep it short because I think you guys might have asked me this on another one. So um, I grew up in North Carolina. I came to New York because my grandmother had passed away and I wanted to help my grandfather settle his estate. And somehow in that, I ran into a childhood friend because I used to come to New York all the time, who was driving a Lexus but was dumb as a box of rocks. And I said, "What do you do?" He goes, "I work at the New York Stock Exchange." I said, "What do you do there?" He goes, "I don't know." I was like, "Oh man, I'm going to write a book about Wall Street and how absurd it is and all that sort of stuff." So I get an internship and I fell in love with it. It was way more of meritocracy. Fast forward a couple years, I landed a hedge fund. We're doing great. We're buying 15 stock portfolios, really deep into stuff. Love this stock, Newmont Mining, right? It's a great way to get gold exposure. And all of a sudden, I watch it go straight down on a year when gold went straight up. And the realization was, oh, they just launched GLD. This was 2005. And people could get exposure directly to gold. So they were no longer willing to pay a premium for a gold miner, which was what Newmont was. That was the epiphany to figure out ETFs. All right. And so I spent the next 7 years investing in ETF companies. We were the biggest shareholder of Wisdom Tree at some point. We invested in Emerging Global Advisors, which became Columbia Threadneedles ETFs. We did projects with ICE Ventures, all kinds of things. And once I was done with the hedge fund world, I started this company and I took a job at the same time at Global X as head of investments there. So,
Yeah.
for the next 3 years, I kind of just built all kinds of ETFs. I had just saw ETFs as such a threat to traditional stock picking that I wanted to learn everything I could about it. Fast forward a couple more years, sometime 2006, 2016-ish, I start to get questions about Bitcoin, right? And I hear these Winklevi are going to launch a Bitcoin ETF, and I do all the research and I read about this GBTC, and I'm just like, this is so stupid. What are these people talking about? Like this off the system and drug money and Silk Road and all this stuff, right? And then a friend of mine, Dave Noddick, from Vetify, says just read the white paper, like just read the white paper, forget all this other bullshit you're hearing. I was like, all right, Dave. I read the white paper and I was like, wait, it's fucking math. This is clear. Holy shit. This can replace ETFs. Someday there'll be blockchain traded funds. I need to get to know all of this. And I jumped in and I started buying for our clients GBTC. We made like 1,500%. Started buying
Wow.
certain blockchain stocks. Um, at the time it was Hive, but it was Grow and couple. We got into it. There wasn't a lot of them in 16 and 17 that you could choose from, which culminated in 2017. Amplify was Christian Magoon, who's the CEO, was approached by this gentleman, Gabriel Rojo, who was working on a blockchain index. And Gabriel was a computer scientist. He had worked at Cisco. He knew the Drapers. He was all in on Bitcoin, and he was working on this index. So they looked at it and they didn't understand it that well, but they were like, there's something here. And they knew that I was already trading this stuff because we had done other things with Amplify. And they called me and Guillermo up and they said, hey, would you guys want to work with us on a blockchain fund? And we're like, absolutely. So, we looked at it and we said, okay, he's got an index as a great research tool, but this world, it was so new at that time that we said we need to go active so that we can pivot and move and deal with things. And we did go that way. It was the fastest filing I've ever done in my life. Like literally, usually an ETF takes 3 to 4 weeks to write all the prospectus, get it out there, and do all the things. We did this in 7 days. And BLOK, it was a rough start. Like 2 days before we were launching, the SEC called us and said we can't use the word blockchain in the name. That's why it's such a, the ticker is so important here because it's very clear what we do from the ticker, right? But then, now there's like 19 with the name blockchain, right? Because the SEC. But at the time, there were things like there was a tea company called Long Island Iced Tea that was launching, and they changed their name to Long Island Blockchain. And the SEC was worried about those sorts of things. So, we came out of the gate. First 2 or 3 months was 200 million came in. And then we went into our first crypto winter. So BLOK's on its second crypto winter. We lived through the winter of 2018, 2018 and most of 2019, culminating in 2020 at the bottom during the first couple days of COVID. And then we had an amazing run and participated in the upswing of mid 2020. And I think we survived comparatively to both Bitcoin and most of the competitors. We did very well protecting the downside. Now, I say that we were down like 60 something percent, but most of these things were down 80 to 90%. So, I'm not taking a victory lap on negative 60.
Much easier to get back from that though than negative 90, 85.
Negative 90s, and it's very hard. And this year we're doing very well. We're participating in the rally. We definitely are in a more aggressive stance than we've been in a long time. And really, I think I'm most proud of how we traded around the banking crisis. It really worked out well.
And this is so you move funds out of these banks and into other sectors you think have more promise.
We definitely upped the miners. We did some great trades where we were at a clean spark for a while. We added to that. We had great trades on Riot, Galaxy. So we came into the year with the miners under 15%, and now they're north of 20 or very close to 20. The miners have the most beta to this sort of stuff. We've also looked for a little more international things like Nubank. Really excited about that name. Things like that.
Can we go over the just take a step back and just provide us the sort of investment thesis for BLOK and maybe just detail the sub themes or the key sub themes that are.
Yeah, so the investment thesis, right, is to get you exposure to blockchain technology. Now, that doesn't mean cryptocurrency, but there's going to be some beta, right? Over the last 5 years, we've had like a 7.7 or 70% correlation to Bitcoin. I'm real happy about that on the way up, not so happy on the way down. We really try and mitigate that downside. Now, That's not the mandate, though. The mandate is get you exposure to the technology, right? Because the technology exists in two different markets. It exists in the market of decentralized finance, right, which is Bitcoin and Lightning on top of it and things like that, and Ethereum and NFTs and all that fun stuff. Then you have blockchain as a technology in the old boring world, which that's Accenture, IBM, even Overstock to some degree. And in that world, it's about logistics. It's about better use of things. It's about sharing information without sharing the source of your information so that you can protect your IP and things like that. That, ironically, is already like a $50 billion industry. The boring blockchain is a $50 billion industry. Now, to give that context, the ETF industry, I use the US usually as the proxy of it, is like 13 billion in revenue. So,
Wow.
so like boring blockchain is like 4 to 5 times bigger than ETFs. so let's just put boring blockchain aside. It's real. And we hide there. I say that when there is crypto winters. Like last year, our biggest positions were IBM and Accenture and Chicago Mercantile Exchange, CME, because the
Yeah.
CME has the futures. And if everybody's shorting Bitcoin, well, what's the best way to short Bitcoin? Especially now that FTX is gone, it's CME. So those are the places I would say we hide during the winters.
Yeah.
The other end of the spectrum is the more decentralized one. The best play there is two things. One, it's the miners, right? Because they make money by producing the next coin and by dealing with transactions. And then the on-ramps, Coinbase, things like that, Square, PayPal, those have kind of the highest beta. For us, the way we construct the portfolio, it's a kind of it's a pretty rigorous process, right? It's based conceptually on the concepts of indexation. So we start with the idea of there are core pure play companies and there are non-core. And a core position starts at around 3% and we cap it at 5. And a non-core starts at 1% and we cap it at 3. So that's kind of our rebalancing, which has saved us more times than not. There's a lot of things where people be like, wow, you got at a riot at the right time. And we're like, no, it became a 7% position and our mandate says bring it back down below 5, right? So like, it's not that we knew something, it's that we're disciplined, right? Number two thing we do is segments. So our goal is never to have more than 25% at the end of any quarter in any particular segment. Now the segments, we use that term because there are no GICS categories or Morningstar categories for these blockchain companies, right? So we have our own categories. We have miners, which is obvious. We have transactional, we call it, which is Coinbase, Square, Nubank, ones that are doing transactions and things like that for through crypto or blockchain. Then we have applications. There's not that many of these out there. They come and go. Like a lot of the banks that we were in them because of the idea of application, right? New York Community Bank a year and a half ago was all they were talking about was, hey, we're going to do mortgages on the blockchain. Now nobody's doing mortgages, right? And banks have a lot more to worry about. So that application's not there anymore. We have a group that we call exposure, which is what we really mean by that is get exposure to Bitcoin itself. We own 4 different spot Bitcoin ETFs in Canada. We have also exposure through MicroStrategies, but MicroStrategies is now both exposure and application because they are building on the Lightning Network now.
Wow.
And we also own MicroStrategies bonds. So we're an equity fund, but when crypto was at its low, we bought his bonds at 70 cents on the dollar because we're like, wait, we're senior security and we're going to participate in the upside. So we do things like that as well. We also have conglomerates, which would be like a galaxy where they're doing multiple different things, right? They're investment banking, they're trading, they're in venture, like they have a bunch of different things. So all in all, we have about 7 segments, including semiconductors, including boring private blockchains. And we essentially pick the best core and non-core in between those, and we decide how much each segment's going to be in the portfolio, and we manage that way. So a lot of times discipline is forcing us to make good decisions. Like there have been times where the miners creep up to 30%, and we look at it and say, our mandate says we need to keep this under 25. And we say, okay, which of these are the ones we're going to trim from. Which one do we have? We've been to all these mines, and there's a lot of beta, but there's also ones that you can figure out there's going to be problems with.
Yeah.
So yeah, that's kind of the construction.
And have you got an idea in your head which theme segment you think might have the biggest sort of potential in the next bull run? Do you have an inkling of
Yeah, I mean,
which one?
it's always the miners, right? Like
Really?
the miners, it's very similar to gold, right? Like the miners, when things run, they run twice as hard as Bitcoin. Like
Okay.
Bitcoin's up what 70% year to date, and the miners are up like 120.
Yeah.
And on the downside, it's the same.
Yeah.
Right. And it's the same with GDX versus GLD, right? Like GDX is the miners ETF for gold, and
Yeah.
GLD is the gold, right? When gold runs, the miners run harder. When gold falls, miners fold harder.
Yeah.
So as a segment, it's like really, really easy to win with the miners. The work we do there is about trying not to own too many of the ones that blow up, because they do blow up. It's very capital intensive. I mean, the biggest one in America is still in bankruptcy filing, right? Core Scientific, which
Wow.
we owned it through bonds, so we're going to get it restructured. But what it was like, it's a money printer that just did not properly do the traditional finance thing, and they got caught in the winter. They really got taken down by all the bad stuff that happened in all the frauds, right? Celsius was one of their biggest clients. Celsius was caught up with all the Three Arrows and GBTC mess, and everything unraveled, and boom, they're having to pay a company that's in bankruptcy that's not paying their bills, right? Like,
Yeah.
yeah, that's TradFi. That's not DeFi.
And so, there is quite a lot of risk there with the miners on that side. Or
Oh, absolutely.
how do you mitigate that risk? How are you looking in doing your DD on the miners?
Yeah. So we don't own any miners that we haven't been to the facilities to look at. Okay.
Oh, right, cool.
Yeah, and there are some that we went to the facilities and sold it. I'm not going to say which ones, but one of them, we went back to the facility a year later per their request, and all the things that we were concerned with had been resolved, and we made an investment, and it was really good timing. Number one, we want to see it. We want to know how they're dealing with immersion. We want to understand their energy contracts. The really good ones are not Bitcoin maxis. They're energy arbitragers, right? Like, because that's the math play as a business. We also like to know how much they're holding versus how much they're selling into the market. Those are two very different strategies. But the number one most important thing with buying a miner is, do they have a good CFO and balance sheet, right? Because
Yeah, okay.
there will be another winter. And if they have a good CFO who can, print the right amount of shares when they need to and survive the TradFi nightmares during the winters and come out on the other side, that's the most important part. It's like balance sheet and CFO.
Yeah.
Leadership, really important. I mean, look, Riot's one of our biggest positions. At one point, we wouldn't touch it with a 10-foot pole. It was totally different
Really?
management, things like that.
Wow.
Yeah. I remember when we first came out, like early 2018, Riot was making all these headlines, right? Oh my God, they're doing this. And then there was this announcement that they were acquiring a broker dealer, and they were going to be able to push Bitcoin through their broker dealer. We read this press release, and we're like, this doesn't make any sense. So we called the broker dealer that was listed on the press release, and they didn't even know what we were talking about. They're like, Riot? Who? And we immediately sold it. And we didn't go back in for like 2 or 3 years until we met the new management and Jason, and
Yeah.
Chad, who's come and gone, right? So like, it's really, really important. Like you can't do this for beta. If you buy 10 miners, 5 are going bankrupt, right? So I'd like to own 7 and know that I've got 5 that are really good,
Yeah.
and believe that I've got 7 that are really good. But during these cycles, they're gonna pop. Because it's not an easy thing. You're mining an insanely volatile asset. You better be
Yeah.
really, really well financed.
And how do they approach? Or I mean, I imagine they approach it in different ways, but obviously there's a transaction cost which you've been talking about, which has been going up a bit recently, and they're obviously making Bitcoin. How many of them are holding on to this, or what's the decision on holding on to it, or are most of them liquidating it? Putting it into fiat,
Yeah.
getting a fiat back for it.
Um. So I'm trying to. Most of the public ones that we own are hodlers. Hut 8's a
Yeah,
hodler. Mara's a hodler. Riot sometimes not. Clean Spark some mostly. Um, a lot of the smaller ones like Iris and things like that have a little different strategy. Um, but most of them look at it and say, if I really, a Bitcoin I mine today goes up in value tomorrow, there's going to be less of them after the halving. They really all are living towards the halving all the time.
yeah.
Yeah, their presidential cycle is a little different.
Which is coming up, right? I think it's
Yeah.
April next year,
Yep.
right? Can you possibly go over the recent quarters? How have obviously you're actively managed, you're doing it outside of the quarterly rebalancing, but what's changed? What significant changes have happened over the last months, and how's your strategy pivoted? Over the last 6 months, because I think it has changed quite substantially.
Yeah. I mean, the biggest thing is the amount of exposure to private blockchains and what we call applications and banks has gone, you know, down by about 50%. And we've very
Yeah,
much increased the exposure to miners and to the transactional platforms that are the closest pure plays. Um, I mean, I would say, to put it simply, we went from risk off to risk on. Um,
yeah,
and we did it rather rapidly because we heard it in the not in the price of Bitcoin as much as in the activities of the companies, right? Um, we heard the banks pulling back, right, and we heard the traditional boring blockchain ones pulling back, and we heard the miners pouring gas on the stove. So it was really easy. I mean, and you saw it in Square's earnings. I listened to the conference call this morning, like and we have this Wells notice with Coinbase, but you listen to their earnings and it's like a tale of two cities. So there's a strange thing happening where we have a U.S. economy where everything is about recession, everything is about inflation, and yet the market's up 10%. Growth stocks, large cap growth is up 20, large cap value is flat. Everybody thinks AI is going to change the world tomorrow. So the sentiment in the world that we live in is really positive, even though the
yeah,
overall sentiment for the economy, the markets, is kind of negative. And it's because business is happening here again. And the business we're in is somewhat of a hedge to the recession, somewhat of a hedge to the debasement of currency. So it's not pure, right? Because you get beta, but that's our biggest pivot is we went from risk off to risk on. And we have our blockchain monthly videos, and Weisskopf writes a piece each month,
yeah,
and we've been very, very clear that we spent last year hiding we were the groundhog, right? Not hiding from being public, but hiding in IBM, hiding in Accenture, hiding in Customers Bank, things like that.
yeah.
And we were very, very vocal in December. Wait a minute, we see something here. So you know I feel good about how we've traded and pivoted.
Yeah, no, I think it looks like the right thing to do. Well, it's worked out so far, right?
It's worked out so far.
Yeah.
We'll see.
Um, I was going to ask if there are any merging themes or segments, if you're able to share that,
Yeah.
or you can think of in the near future that are of interest to you that you might not have invested in.
Yeah, so I spent a lot of last year talking about applications because it was we added that segment. Those companies used to be under transactional, and transactional got really big. I love this idea of more applications. And I think the question you asked earlier about the ordinals, that's an example of it. The mortgage origination. What I heard from Square's conference call. I watch Coinbase and what they're trying to do more things. I think there will be more and more applications, but I do think we're still in the pets.com era, meaning
Yeah.
the base layer is not big enough to support it. And I always use pets.com as an example because, you know, whatever issues that were idiosyncratic to pets.com, maybe they spent too much money, maybe they had the wrong management, whatever. There's no doubt, though, that the business plan made sense because today we have a company called Chewy.com that does extremely well, and it's essentially the same thing. But what's different is we now have a delivery logistics system with FedEx and UPS and whatever else, DHL, that actually works. And we now have, instead of 100 million internet users, we have billions, right? Like,
Yeah.
I think of a lot of these applications as they're early, even, and they may or may not make it, but they will be reborn someday on the established Bitcoin blockchain. So yeah,
Yeah.
I'm most excited in that space. I'm also like, I love that BLOK can go anywhere. Like we own things that nobody else owns. Like, like you pointed out, GMO Internet or Digital Garage. Nubank really excites me. And I like to use this one to just poke at Charlie Munger and Warren Buffett because
Yeah.
they're like fully vested here. And this is like a fully all-in Brazilian bank that is all about blockchain as well. And like I think about like Brazil is so amazing to me. So we're also partnered with Hashdex on some other products, and they're global, cryptocurrency or focused asset manager. And they have an ETF with us here in the United States called DeFi is the ticker. That's Bitcoin futures and 33, but that's got like no assets, right? Like nobody's ready for it here yet. But in Brazil, they launched a Bitcoin ETF. It's the second largest ETF in Brazil. like people trust Bitcoin there more than anything. So like that's why I get excited about these international plays, like a new bank doing something in this space. We did it in terms of applications. We added Splunk earlier this year, which is a
Yeah.
cybersecurity company using blockchain for certain things. We've looked at some others, like we don't own it today, but we're not sure about the company yet. Actually, I know the company a long time because I used to invest in it at the hedge funds. But it's Khaki International is one we've been looking at. They're a defense company, and they're doing a lot with defense and the use of blockchain, which is an application that makes a lot of sense to me because it's the ability to share aggregated data while protecting specific data. That's one of the
Yeah.
cool attributes of blockchain. Um, but they're very much a black box company, so it's really hard for me to get in there. And there's certain political aspects to it that scare me as well, right? I mean, they were behind Blackwater and stuff like that, so
Yeah.
yeah. But yeah, applications, international, um, that's a lot of interest for us right now.
Yeah. That's cool. And just going back to, we touched on it earlier, regulation. Obviously, there's been a lot of stuff happening, but not much happening at the same time on
Yeah,
regulation. US
yeah.
and Coinbase has been wrapped up in it all. What do you think is the next move for Coinbase? Do you see a future where some of these US companies, even the miners, move offshore? I don't know where they go, but another country where
Yeah.
it's more favorable for them.
They're not going offshore. Texas
Yeah.
wants all of them, right? Like Texas is so pro this, Oklahoma, Wyoming, like there's so much energy that is just being wasted, and the miners are like extremely helpful when they collaborate with the energy companies in Texas,
Yeah.
Oklahoma, Wyoming, uh, North Carolina. I've been to plants, I've been to towns that were dead that were rebuilt around Bitcoin mines,
Really?
sewing
Wow.
factories that have been refurbished into something beautiful. It's not going away. There, the U.S. is not banning it. It's not leaving here. It belongs here. Um, what is going to happen is they love it because they can tax it. Right, like there's a so I'm not worried about that. What I am worried about, the biggest concern I have from this technology in the United States is the true issuance of a central bank digital token, because that's real control over the
Yeah.
populace.
Oh,
Like
it's crazy when you think about it. I mean,
that is so scary in so many ways. Um, so Elizabeth Warren can complain about the energy use, and New York can ban it unless it's this or that. All of that is just narrative, right? Like
yeah.
Bitcoin mining globally uses 1/3 the energy of gold mining. Okay, well, what is the application for gold? Like
Very little,
jewelry,
isn't it? Yeah.
right? Like
Yeah.
so like it's so stupid to me. These arguments that they make. But oh, it's more than Ireland. But who cares about Ireland? What's an industry, right? So you know, Ireland's like smaller than North Carolina, like like in terms of like GDPs and things like so. I don't know if that's exactly right. I don't want to get caught and have 50 million YouTube numbers. I'm sure it's smaller than New York or
Yeah.
California. Yeah. um, uh, but I think the regulation that they're going to really need is clarity on tax treatment, clarity on how the rules around investing in it, right? So, like, in my mind, the reason there's not a spot Bitcoin ETF in the market today is because there's not already a law that says Bitcoin as an investment is treated the same way as a stock, meaning if you hold it, you can't pump it, right? So you may love or hate Elon Musk, but 3 years ago he pumped Bitcoin, or 2.5 years ago he pumped Bitcoin, and after he bought it, if he did that with a stock, it would be illegal. He did it with
Yeah.
Bitcoin, and it was totally legal because they hadn't made a regulation around that, right? So it's clarity of disclosure, it's clarity um, of tax treatment, it's clarity of accounting treatment. Like Saylor speaks a lot about that as well, right? Because he owns an insane amount on his balance sheet, right? Um, but he can only mark it down under current accounting standards, right? So he can't mark it up. If he owned my ETFs on his balance sheet, he could mark it up, but then he becomes a security, right? So Bitcoin's not a security. So it's like a bouncing ball. You're like, okay, so I can do this. Yes. And then you walk over here. I'm doing this. Oh no, we have this rule over here that says you can't do it. All right, I'm going to go back over here to this regulator and then, oh, you can't do that. Like, and it's so funny because I remember talking to the folks at Silvergate when they were like, Silvergate did nothing wrong. They basically had a run on them because of all the breakdowns everywhere else. And so everybody pulled the money out of the Send network. Now they may come back and say, some of those people on the Send network were doing things wrong. That's possible. I'm sure FTX was in there and stuff like that. But whenever we would talk to Alan Lane, he'd say, I've got perfect clarity from my regulator. You know why? Because he only had one regulator. He had the Fed. They tell him this is what you're allowed to do as a bank. He didn't have to deal with the SEC because he wasn't dealing with it as a security. Right. So it's when you go across these various different regulatory areas. So my statement for last couple of years is everybody wants the US government to say, okay, there's a Bitcoin spot ETF, and that's the tacit endorsement. No way. The SEC is too small in the overall big picture of the US government for them to decide the stance of the US government on Bitcoin. It's got to
Yeah.
come from the administration or Congress or whatever. And then the SEC, their job isn't to decide what Bitcoin is. Their job isn't to take the government stance on it. Gensler, as a bureaucrat, as a person working for a bureaucracy, a US government, he's played this perfectly. Not for me, not for the average investor, but for the government, he's played it perfectly because he's managed to not do very much, right? He's not supposed to. He doesn't like it. It's too much power for an agency that's there just to protect investors and provide disclosure and enforce a 1933 Act law and a 1940 Act law. It's not their job to decide what Bitcoin is. That should be coming from Congress. That should be coming from the administration, even the IRS before the SEC. So,
Yeah.
so I think there could be a Bitcoin spot ETF tomorrow if the Biden administration said Bitcoin is this and it's treated this way for disclosure purposes. The next day, all these other arguments go away because
Yeah.
you can no longer front run, you can no longer manipulate. So
Hopefully.
I get passionate on that one.
Yeah.
And
I
I'm
think
not picking a fight with Gensler. Gensler, I love you. You're doing the best job you can with the mandate you have, and we've had no problems with you.
Just before we wrap up, I thought you could just quickly talk to us about Overstock and Grain Chain, which look quite interesting.
Yeah, I'm gonna have to say that Weisskopf knows way more about this than I do, like the details on it. So I'm not the right one to get deep into this one. Now he's written about it. It's been in our commentaries. He told me how excited he is. My overall picture with Overstock really is the Medici ventures, the things they've done, maybe not always for the right reasons, right? Like, so they really figured out a way to double list, right? List on a blockchain and list together. That was figured out by Patrick, the former CEO, because he thought there was a bunch of people shorting his stock. So he used this idea of blockchain dividend to force out all the short sellers. So for other reasons, Overstock, which is a retail reseller, decided to get into the venture business of blockchain. And through that, they've made some amazing discoveries, ideas. Grain Chain's one of them. And I think there's this completely undervalued portfolio of small blockchain projects through Medici Ventures that we're going to see really changing the world in the future. Grain Chain's one,
That's owned by Overstock. That's a
that's owned by
VC firm.
Overstock. That's underneath their umbrella. If you own OSTK, you own that as well.
Okay. Interesting.
T0 is in there, So like,
yeah.
there's a bigger venture portfolio there than, I mean, it's going to be one of those stocks that kind of like, I don't know if I might date myself, but like when I first got into the industry, it was like 1999, 2000. And there was companies like MFNX, Yahoo was kind of one of these where,
Yeah.
They owned like 100 different venture projects and 99 could go to zero and one could make it worth insane amount of money. Right.
Yeah.
And there's been things like that with like Naspers, right, which was a newspaper in South Africa that owned
Yeah.
Tencent, right? Like it was the public way into Tencent. Like, so I think Overstock's one of those. There's a number of these ventures, and any one of them could change the world.
Yeah. I believe Coinbase Ventures has got quite a lot of investments. Is that is the VC?
Yeah, so Coinbase does, Galaxy does, but most of them are tiny stakes, 10%, 15%. What Overstock really, it owns these things, right?
Oh,
like,
right.
yeah, like these are its ventures. Like, it's not,
Okay.
it's not passive. It's not small. They're small projects where Overstock is majority.
Okay.
Galaxy, Coinbase, they're rarely majority. They're more like, we'll co-invest just so in case you come up with something, we've got a chance to jump in before you can compete with us. Yeah.
Well, Mike, thanks for the conversation. It's been really interesting. I've really enjoyed going deep on everything blockchain with you. Where can people follow you and find out more information on BLOK? If you just give us some links,
so
show notes as well.
Yeah, the simple thing for BLOK is blocketf.com, BLOK-ETF.com. That'll take you to Amplify's website. You see the holdings, you'll see our videos, you'll see all that stuff. It's easy to find me on Twitter. You just look up Michael Venuto, you'll find me.
Yep.
I'm all over the place. But our research website is etfthinktank.com, and that's where you can find out all of our ETF research. It's also got links to our blockchain videos. We've interviewed all these people, right? So we have interviews with Saylor. We've got interviews with Novogratz, John Steinberg over at Wisdom Tree, Jamie who runs HUD 8, Frank Holmes who runs Hive. Like, Weisskopf has interviewed every one of these CEOs, and you can see us literally doing the due diligence.
That's awesome.
And then there's some archive ones, like we interviewed Steve at Voyager. I wouldn't surprise me if that ends up in some lawsuit someday. There's a lot of really great content at blocketf.com and etfthinktank.com.
Amazing. And that's monthly. I think you release the updates
Yep.
on what's
We do
happening
a
in the crypto
monthly
space.
written one and a quarterly video.
Amazing.
Yeah.
Well, thanks, Mike.
Yeah, it's been a pleasure,
Have a
Ed.
great day. And yeah, I hope you get the chance to do this again.
Sounds good. Thank you.